Back to Keith Lerner of Truist. Keith, I hate to throw this at you, but it is a time of the year where in any presidential cycle, we would begin to fold in this dynamic to investing decisions. This year, obviously, an outlier in so many different ways. But does it create risk for equities in the back half?
It does, though, Carl. We're working on a note that we're going to publish next week, and our work strongly suggests that conventional wisdom is often wrong around the elections. I'm going to give you a stat that's probably somewhat surprising. When we look at the last three presidents, including the current one, the annualized return for the S&P under all three, so Biden, Trump, and Obama, has been between 12 to 14%. The other thing from a market perspective, we know what's been one of the top sectors under all three presidents: technology. So listen, the election matters. I think as we turn past Memorial Day, when we get into June with the debate, Trump's VP pick, I think the volatility is going to come into the markets. But again, I think, people start to think this is the only thing that matters. It's very emotional. Our work strongly suggests other factors matter. What's going to happen with inflation? What's happening with the economy? What's happening globally as well? So I just wouldn't lose track. It is going to be important. It is going to inject volatility. But these other factors, in our view, actually matter more for markets.
Yeah, and for those of us that want to hear that, I mean, it's being sidelined right now by debate about the legal system in this country. So do you have a view about who would be better for the stock market, Trump or Biden?
I do not have a view of who would be better for the market. I think one of the main things is, I would say, we're in a re-election year. For the last 75 years, during a re-election year, the market tends to do well because whoever is in power is trying to support the economy to get re-elected. So that's a positive. During an election year also, as long as you avoid a recession, the market tends to do well also. There's also going to be a lot of questions, potentially a lot of tax changes in 2025. We've also done work on that. It certainly will impact businesses and on a personal level. But when we look back historically, there isn't a clear correlation between how the market does and tax policy as well. Again, I think whether the Fed is able to stick this soft landing and the path of inflation will overwhelm the presidential election, even into next year. And let's also say, if you think about 2020, that was a heated debate. Back then, we were saying the path of COVID would be even more important. And just a couple of days after the election, we had Pfizer come out with a vaccine announcement that really turbocharged the market to the upside. So again, I'm not saying it doesn't matter. I'm just saying this will be such a main focus, but other things actually ultimately matter more, including earnings and what happens with tech and AI, all these other factors that I think investors don't want to forget about.
Keith, good reminder, especially in light of how much attention this is drawing. Thanks so much for that, Keith Lerner over at Truist.